The market is closed, and the last reported closing price for Rezolve AI PLC, trading under the ticker RZLV on the NASDAQ, was $4.29 as of 4 p.m. Eastern Daylight Time on Friday, October 31, 2025. This closing price represents an intriguing 4.89% increase from the previous session's close, a swing that immediately signals a tension between the company's ambitious narrative and the high volatility inherent in small-cap AI stocks. Most people looking at a nearly 5% up day in the current market would simply assume a continuation of the AI-driven enthusiasm we've seen in larger names like NVIDIA stock. But the deeper insight here is that this specific move occurred on substantially lower volume compared to its 90-day average, suggesting that while sentiment might be firming up, perhaps fueled by recent corporate announcements, the conviction from the broader institutional investment community is still building rather than a full-scale flood of buying. This relatively quiet but strong price jump after a period of consolidation is precisely the kind of low-key technical move that sophisticated self-investing individuals and those utilizing an intelligent portfolio for their online investing might notice before the mainstream finance media catches on. An observation that immediately sets the stage for a closer look at what's really driving this stock's valuation. The general market expectation surrounding Rezolve AI PLC is, understandably, heavily skewed towards the explosive growth story of the AI sector. The common belief is that the company, as a player in proprietary AI-powered commerce solutions, is fundamentally undervalued compared to its peers. We've seen press releases emphasizing this point, comparing their valuation multiple, around 17 times projected annual recurring revenue, to competitors whose multiples soar into the 30x to 100x range. This narrative of a significant valuation gap is the core expectation that keeps speculative capital interested, a dynamic we've witnessed countless times in the tech growth arena, including with early high flyers like Tesla stock. The reality, however, is that while this valuation comparison is compelling on paper, the market is currently grappling with the company's operational reality, which is characterized by high volatility, substantial operating losses, and negative cash flow, a picture painted clearly in their recent financials. The market is effectively asking, is the discount justified by the risk, or is this a genuine ground floor opportunity? The movement in the RZLV stock recently has been less about a steady march and more about reacting violently to news flow and institutional posturing. The stock has been highly volatile, with a 52-week range stretching from $1.07 to $8.45, showcasing the speculative nature of its current shareholder base. This recent upswing comes shortly after a series of management changes and strategic acquisitions, particularly in the data and payments infrastructure space, which the company claims are essential to move toward profitable, scaled growth. We saw a similar pattern of strategic moves driving short-term enthusiasm with certain fintech players like SoFi Invest when they were rapidly expanding their product offerings beyond just lending. Specifically, the announcements regarding strengthening the leadership team to accelerate global revenue and deepening their AI-led commerce capabilities likely provided the positive catalyst for Friday's climb. Volume, as mentioned, was moderate, but the percentage gain is significant, suggesting that sellers were either exhausted or that a small amount of concentrated buying power was able to lift the price against a thin book, a scenario common in smaller cap stocks on the NASDAQ. The institutional activity, which is a critical piece of the puzzle, has been quite telling. Filings show a notable increase in institutional ownership, with major firms taking new positions. This isn't just retail enthusiasm, this is sophisticated capital, the kind that might be clients of Fidelity or use their various services, from Fidelity Investments to their individual brokerage accounts. The fact that names like BlackRock and Geed Capital Management have increased their positions by hundreds or even thousands of percent in the last quarter, even if it's a small overall percentage of their massive portfolios, lends a degree of validation to the story that retail investors, perhaps those learning self-investing through platforms like Robinhood stock trading, are desperate to see. The increase in the average one-year price target by analysts to over $10 a share reinforces this bullish institutional sentiment, even as the stock price remains stubbornly lower. Let's step back and consider what Rezolve AI PLC actually does. The company's core business centers on an AI-powered commerce platform known as the Brain Suite, specifically designed for the retail and e-commerce sector. Their goal is to inject AI-driven intelligence into every part of the shopping experience: product discovery, personalization, and checkout. Their proprietary large language model, which they call brainpowa, is engineered specifically for commerce applications, aiming to solve the high cart abandonment rates and poor personalization that plague generic e-commerce platforms. Think of it as specialized investment help for retail, but instead of helping you manage your Fidelity ETFs or Fidelity mutual funds, it's helping a retailer optimize sales. They offer solutions like Brain Commerce for multimodal product discovery, allowing customers to search conversationally, visually, or through text, and Brain Checkout, which features instant one-tap checkout and supports crypto to fiat payments through a collaboration with Tether. This strategy of vertical focus, AI tailored specifically for commerce, is their key differentiator, a contrast to the broad-based AI models used by tech giants. Looking at their historical performance, the company has consistently focused on building a scalable foundation, which meant that revenue in 2024 was, in their words, quote, immaterial. This is a common pattern for high-growth, high-tech firms, but it introduces significant execution risk. However, they've reported an explosive start to 2025, with gross merchandise value processed through the platform smashing past $50 billion year to date, suggesting that the platform is gaining traction with major enterprise clients. They secured a substantial contract with a large international retailer and, as a result, raised their guidance, aiming for an annual recurring revenue of $100 million by the end of 2025. This pivot from negligible revenue to a triple-digit million-dollar ARR target in a single year is a major source of the current tension: huge projected growth versus current, still unprofitable reality. The acquisitions of companies like Subsquid and SmartPay fit into this strategy, building out the data and payment processing backbone they need to handle global, scaled transactions, especially in the context of digital assets. These strategic moves are what a user of Interactive Brokers' trading platform might appreciate, a company actively positioning itself for future markets. Now, let's turn our attention to the future outlook and what possible scenarios could play out for RZLV stock. The core catalyst is the execution of their 2025 ARR guidance. If Rezolve AI PLC can genuinely hit or exceed that $100 million target, the argument for their undervaluation relative to peers becomes significantly more compelling, and the stock price has a clear runway for appreciation. This would validate the aggressive expansion and strategic acquisitions. A secondary catalyst is their success in implementing the crypto to fiat payment solution. If this feature gains broad retailer adoption, it could create a powerful, fee-reducing payment infrastructure that differentiates them sharply in the commerce technology space. This is a big if, of course, as the regulatory environment around crypto, which a self-investing person must consider, is constantly shifting. The opportunity here is for RZLV to become a category-defining leader in Agentic Commerce, where AI is not just a tool, but an autonomous agent handling complex transactions and personalization. The risks, however, are substantial and cannot be ignored by anyone engaging in online investment. First and foremost is the financial fragility. The company has a high burn rate and needs to continue raising capital or show a rapid path to profitability. Any stumble in meeting that ambitious ARR target will likely lead to a significant repricing of the stock, causing substantial disappointment for investors who bought into the growth expectation. Second, the competitive landscape is brutal. While RZLV focuses on vertical AI, they still compete for the same enterprise dollars as massive technology companies and other well-funded startups in the AI for retail space. They have to continually prove that their brainpowa LLM and specialized solutions deliver superior, measurable ROI that a retailer can't get from building on top of a general-purpose model from Google or Amazon. This is the expectation versus reality tension crystallized. The expectation is massive growth and peer-based valuation. The reality is a significant